We have a market master of the day ready with us, Saurabh Mukherjea, as founder at Marcellus Investment Managers. Saurabh, good to have you with us here. Good morning. You know, my colleague from Chennai spoke yesterday with Mr. Shailesh Chandra, MD of Tata Motors, and Mr. Chandra actually, in a way, reinforced what we've been talking about, which is the premiumization trend. He kind of said that, car makers who are focused on hatchbacks, sedans, have got reasons to worry because this is structural. It's not a near-term trend, etc. My question, though, is not about autos, but about that entire move. The lower end is doing pretty poorly. The upper end premium is doing very well. The question really is, across categories, is the pool itself expanding in a very large way in terms of, people who can buy, stuff at the premium end? Is that pool growing at a fast enough pace to sustain demand? Your thoughts, Saurabh?
So look, I mean, if you go by the income tax data that's come over the last couple of years, Prashant, people earning 1 crore or more in India, that number has doubled in the last 5 years. So income tax filings of 1 crore and upwards, the number has doubled in the last 5 years. If you focus on, say, the middle class, assume people earning between, say, 20 lakhs to 60 lakhs, that number is also moving up at a reasonable clip. What we need for the middle class number, assuming 20 lakhs to 50 lakhs is a reasonable approximation for middle class. What we need for that number to bulk up is we need the IT services sector to recover. We need outsourcing to pick up. We need the China plus one story in electronics, in pharmaceuticals to play out. By and large, I'm optimistic that this will work out. I know the IT services sector is going through a lean patch at the moment in terms of recruitment. But all the indications we are getting, Prashant, that the outsourcing of pharma research, outsourcing of payroll, HR, audit, all of that work coming to India, that's picking up a lot of steam. So just some rough back of the envelope numbers. India has 1,600 global capability centers. From what I'm seeing every day, a new GCC, new global capability center is coming up in places like not just Hyderabad, Bangalore, and Gurgaon, but places like Tirunelveli, Coimbatore, Indore. So I'm optimistic that the middle class numbers will swell in the years ahead, and that will give a fillip to aspirational consumption, class consumption. As you rightly said, I think the era of mass consumption, FMCG, low-end footwear, low-end apparel, I think the era of mass consumption seems to be behind us. We're very much in an era where affluent, well-educated people get good jobs, earn more money, and power away on class consumption.
Sure. By the way, the market now is slightly moving towards the red line. So the Nifty is down about 30 odd points. The sensex is down 130 points. So it's gotten worse since the start of trade. Saurabh, hi, good morning. Very, very unfortunate times we live in with what's happening across Gaza. And of course, the implications both in terms of a humanitarian crisis as well as a financial crisis, right? Because not only are we seeing escalation of crude, but it also talks about how inflation, which world leaders were trying to bring under control, now becomes a threat once again. Would that be a concern for you as an Indian investor? And how do you approach all the geopolitical issues right now?
I think the humanitarian crisis obviously is evident and tragic. I'm not so sure, Sonia, that the impact on crude is that meaningful. Remember, the big producers of crude in the Middle East are Saudi and Iran. If they stay out of the conflict, they might have sort of proxy plays in the conflict, but if they stay out of the conflict in terms of direct engagement, it's not obvious that there'll be a huge impact on crude prices. Given the sluggish state of the Chinese economy and given the economic slowdown / recession in Europe and America, there are no evident upside drivers on crude. And if Saudi and Iran, the two big oil producers, stay out of this in terms of direct involvement in conflict, it's not evident to me that there's a massive bull trigger for crude. Crude has been at the 90 levels for the last month or so. Even if you go back a year, crude was at $90, Brent was at $90. And I think that makes sense to me, that more than the tragedy of the conflict in Israel, it's the global economy which fires crude prices. And the global economy, excluding India, is not in a particularly buoyant state, which is why I think crude prices are not going anywhere soon.
Hi, Saurabh. Good morning. I wanted to ask you about the big boy, HDFC Bank. I think it's part of your portfolio. And, in the markets today, you're looking at a good quality company, a well-run organization, at decent valuations as well. And that's the largest stock on the Nifty. Are you all a buyer at current levels?
Well, look, it's trading at the lowest price to book in 20 years. I think it's mouth-watering. And I thought results were sparkling. If you strip out the HDFC Limited numbers, our read was in the bank, on the core bank numbers. Net interest income was up 30%. Provisioning was down 10%. Provisions and contingencies were down 10%. And if you then put in the HDFC Limited numbers, the whole scare story that the bears have built that HDFC Limited construction book will come, the developer book will come, there's bad news there. I think that was a complete sort of fan art that people had spread. When the two entities merged on 1st July, the NPA ratio was the gross NPA ratio was 1.41. And as Sashi Bhushan said, 3 months on, the gross NPA ratio is 1.34. Strip out HDFC Limited, the bank's gross NPA ratio is 1.12. That's nearly half of any private sector bank. And all of these numbers, 50% PAT growth or 30% bank at the bank level net interest income growth, all of that at the 20-year low on price to book, I think is just a mouth-watering. Even though it's a large part of our portfolio, I still believe it will end up being an even bigger chunk of our portfolio. Just a quick disclosure, I'm invested through Marcellus's products, so are my parents, and so are our 10,000 clients.
Sure, got it. You have, of course, believed in consistent compounders for a very long time, right? Whether it's Asian Paints, Divi's Laboratories, even something like a Bajaj Finance. And you've spoken about how these companies have a very strong moat and will continue to dominate despite the kind of competition we're seeing. How did you read into Bajaj Finance's numbers this time? I mean, they've held on to their FY24 guidance. They've spoken about a strong AUM growth. Is there more value on the upside?
So look, I think much like HDFC in Bajaj's case for the last 15 years, we've seen consistent compounding of earnings at the 25 to 30% mark. This time round, loan book and profits came in around again the 20, 28, 29, 30% mark. The reason we back these companies, right, whether it is HDFC or Bajaj Finance, is the quality of people running these companies is an exceptional level. I don't just mean exceptional by Indian standards. Compare a Bajaj Finance or an HDFC Bank or an Asian Paints, you can compare them to the best in the business anywhere in the world. This is exceptionally good management. In Bajaj's case, what I admired further was the management's willingness to give disclosure that in unsecured loans at $10,000 or below, consumer discretionary and unsecured loans, they are seeing some early signs that it's worth pulling back, and Bajaj Finance clearly said they're pulling back from small ticket unsecured loans. Again, that sort of ahead of the cycle clarity, that sort of ahead of the cycle prudence is not usual in Indian lending. You see that from exceptional firms like Bajaj. You also see very timely, very cleverly timed capital raises from Bajaj Finance consistently when they raise money, when the going is good. So from from a perspective of mine talking about a large holding for Marcellus, I was a very happy shareholder with Bajaj Finance's results yesterday.
Okay, all right. Saurabh, we'll let you go on that note. Thanks a lot for joining in.